Ashi Anand joins us. Let's take our conversation forward. Let's understand that why IT stocks have not fallen. Ashi, good to have you back. Whether it's TCS or whether it's Infosys or HCL Tech, the numbers so far are not looking impressive at all. IT companies are talking about business going down first before it recovers. But the stocks today have not fallen apart. With this kind of a commentary in a normal environment, these stocks could have gone on the butcher block.
Nikunj, hi, thanks a lot for having me. So, if you're looking at the IT numbers, it's really not all that bad. There is clear kind of pressure in terms of guidance for the current year. So you've seen HCL Tech, you've seen Infosys cut guidance for FY24. But on the other side, you've actually seen very strong deal wins and very strong deal wins across the board, be it TCS, Infosys, HCL Tech. I think this has been a very strong quarter in terms of deal wins. Now, what this does is it lays the foundation for a potential strong bounce back in FY25. Some of these deal wins are longer tenured in nature, so they will take time to ramp up. You're not seeing the revenue impact of this in the current year, primarily because of that reason. But as we start going into FY25, one, you get some amount of tailwind of these large deal wins that you are seeing companies across the board kind of win. Plus, you also hopefully have some kind of economic normalization as we go into next year. So probably at some extent, the strength that you're seeing in IT is the fact that the current pay-in for this year is something which is known. But the potential bounce back going into next year is partly now starting to get discounted. The other core element when it comes to IT is you are seeing kind of companies be able to hold on and in fact improve margins across the board. Attrition, which was a concern a few quarters back, is also clearly kind of coming down. So I don't think it's all bad for IT. Yeah, there is some amount of short-term pain, but you are seeing some kind of decent hopes from the longer term, and I think that's why the stocks really aren't falling.
Ashi, so in your digital fund, have you added anything of late? Have you made any changes? Because a lot of new interesting digital-based companies have gone public. I'm looking at one company, Zaggle, RateGain. There are a lot of new companies which have gone public of late, which essentially are in the SaaS business.
So, Nikunj, without really getting into specific portfolio action that we may not have taken over the last month or so, yes, we are very clearly evaluating some of these companies. So SaaS, according to us, is a very interesting digital platform. You spend a lot of money building out digital technology, which is your software that you provide as a service. And subsequently, there's just tremendous operating leverage that can play out here. The one concern that we've really experienced when we've been evaluating some of these SaaS players, and that's really where we are in terms of our current research, is trying to just ensure the one thing we're very clear on our digital platform fund is we want to ensure a very clear right to win. Now, in some of these SaaS platforms, you are either addressing a market size which is not necessarily large enough, or the right to win has not yet been clearly established for a particular niche. So while we are evaluating these companies and we may be taking certain stakes in them, this is still not something we are necessarily making very large investments into.
I'm going to get closing comments from Ashi Anand as well. Ashi, at what point in time some of the digital businesses which you have invested in, Zomato and Nykaa and Paytm, you would say that, okay, I bought them, and when I bought them, nobody expected this kind of a 70% comeback in a Policy Bazaar or a Zomato or a 40-50% comeback in Paytm. So at what point in time you would say that, look, these stocks are now looking richly priced, I need to take some chips off the table?
Yeah, so Nikunj, we are actually very confident on the space for the coming decade. Right. I think we were lucky in terms of our timing. We really got the bottom very well. And yes, there has been a very sharp bounce back from there. But if you just look at the underlying dynamics and look at the underlying value creation that's happening towards digital kind of platforms, growth is likely to sustain at very high levels over the coming decade. If you just look at kind of penetration and levels, India has 5 crore people ordering food online. They're over 50 crore in China. There are 18 crore online shoppers in India. They're over 70 crore in China. Now, a lot of internet penetration, access to cheap data, all of that has only emerged over the last 5 to 7 years. A UPI was only introduced as much as 2016. So I think we're still in very early stages of digital adoption. You're still in early stages in terms of the shift from traditional forms of commerce towards digital platforms. Something which is possibly not very well appreciated is how, as the next generation comes into the primary consumption class, this generation has actually been digitally native in terms of their form of consumption. People in our age group, we were used to traditional forms of commerce and have had to migrate towards digital platforms. The consumer of tomorrow has been born and brought up with digital platforms. So growth is going to be something which is kind of going to sustain at very high levels. We have been from day one, we've been, and this is in Feb when no one was kind of expecting it, we've been very strongly stating that profitability of these platforms over the longer term is actually much superior than what people are expecting. Now, if you just take a combination of high growth rates sustaining, profits kind of starting to kind of emerge and actually be at higher levels than what people are expecting, we expect to see digital platforms in India outperform overall markets over the coming decade in a very similar way to what you saw kind of the Nasdaq do over the overall markets in the US between 2010 to 2020. And therefore, our kind of call is don't try to kind of go in and out of the sector. We really see this as a very attractive buy and hold and a long-term compounding story.
Right. Okay, Ashi, great to have you on the show. Thanks as always for joining in. Sanjeev Bhasin, stay put. We're going to take a very quick break and come right back and continue our discussion with you.